After having lackluster performance for about 3 or 4 days now, I finally have some action and activity in my accounts. Profits being made and a loss. Nothing new there in terms of the dynamics, but it's interesting that finally the market is doing something just besides stonewalling or stalemating. So let's get into it and take a look at the real implications of my trading. On the left hand side, we can see where I have my current positions that I'm holding. Nothing overly spectacular, really, but what is important about this entire discussion is that I was at 26%. Let me get my marker up here. And now I'm down to 12%. That's only been within the last couple of days that I've cleared off half of my holdings. I was concerned that I might have been too close to the edge when I was at a higher percentage because of the way the market was looking. So I'm glad to see that my risk level has dropped significantly. It does mean that some of the other numerics involved will also drop, such as my daily finance rates for simply holding. But it's still a good day for profits. So let's start looking at those profits and see just how things worked out. So if I go to my activity, you'll see that for the most part, the Euro USD has been doing its thing. In fact, if we look at the chart, we can see on the monthly just how much it has sold off in such a short period of time. Realistically, though, this needs to be looked at the daily level because the monthly chart doesn't show the dynamic that the daily does. So let's switch to the daily and get back to the end of the chart. And now we can really see the last 3 days have been a whirlwind of selling activity. It has been a very nice and welcomed state for my trading. The trades, of course, have been consistent, which is the important part of the process. Consistency is always the best. But let's go further into the actual trade results and look at them in detail. We can see that the market has an unusual side effect here. I lost $4.11 on Euro GBP. Now this is an accumulation strategy. So realistically, I suspect it's because something went wrong with the signal provider, TradingView, in actually sending the signal out or my server receiving it. It happens, oh well, move on. The world isn't perfect. This is just part and parcel for simple algorithmic trading. It will get made up rather quickly though. And that really is the point of having algorithmic trading, is that such losses do get made up quickly. But let's keep moving down into the details. And let's look at the financing. Financing is really one of my, I don't want to say gimmicks, but it's a way that I hedge against my risks. Certain Forex pairs will earn a negative interest rate, meaning money is actually deposited in your account for holding this pair overnight. As you can see from the look of the amount being earned. It's not significant by any means, but it still is nice to look at in the context of picking pairs that will help you for your longer trading ideologies or strategies. But if we keep going, we will see that there are also pairs, and this is really most of the time, that will actually cost you for holding overnight. It is a simple and realistic fact of trading. Some pairs you may earn money on, some pairs you won't. By knowing this, you can actually tune and optimize your trading to take advantage of this benefit, so that when you do hold small positions, they work in your favor. That is really the whole point of this part of the system. As you progress, as you function, having a framework that lets you make money just by holding works in your favor. Don't underestimate that, because that really is critical. You want to optimize your trading every way possible, so that when you look at your trading, when you look at your positions, if there is a way for you to offset your risk and negative finance rates, meaning you earn a finance percentage on your holding, take advantage of it. It may only be a penny or two here and there, but it's worth it. And it helps in a long-term prospect of trading. Because when you look at consistency of trading, it's that framework, that ideology that keeps you consistent. Your money needs to be in motion in order to be profitable. If it's not in motion, you're losing money. So this helps. The cryptocurrency markets used to have what they called soft staking. That was that whole point. You earned a little bit of the currency simply by holding it, but you could still trade it back and forth. It was a good way of promoting the currency and helping it grow. Why they stopped it, I will never know, because really, particularly in areas like the United States, it was a godsend to have, because the minimum position sizes are just ridiculous. So having something to help you along the way really helped out the cryptocurrency market. Now, realistically, unless you're willing to put $10,000 into the market, unfortunately, it's just not worth trading in cryptocurrency under U.S. jurisdictions at the moment. And if I'm not earning money, I'm not going to let them earn interest on me by holding it. And that's exactly what the U.S. exchanges have become. They're not so much about being an exchange anymore, but rather being their own personal bank, earning vast amounts of interest through their custodial accounts while they hold your money prisoner. At least with the Forex market, my trading is dynamic and fluid, and I have opportunity to hold my money and earn at the same time. So if I hold a long-term position, I might earn a little bit of that finance rate, but I'm always free to trade it off immediately if I have a good opportunity. That really is critical when you think about your profits. For example, 3 cents a profit doesn't really seem like much, but anything that is a win is 90% better than the rest of the market. Don't pass up a good profit. Don't think that, well, if I can get 30 cents, that I should always get 30 cents. That kind of thinking causes you to miss opportunities of profit. Any profit is good profit. Don't ever get caught in that trap thinking that this is bad while this is good. There is no such thing as a bad profit, because you can't tell what the future is, and you can't predict whether or not a position is going to go up or down or sideways. A good example of that is my own lazy trading. This has become a qualified nightmare in a lot of ways. Let me zoom this out. There we go. It can't seem to make up its mind which way it wants to go, so it is just sitting there, stonewalling me right at the top. Wrong button. Okay, so let's actually look at this. I have one position that's a limit order waiting. It's way up here. It's been sitting there for quite a while now, going nowhere. I may cancel it depending upon what the market does. I don't know yet. But the big picture is right here. Just sitting there, holding for 4, 5, 6 months already, going nowhere fast. That's fine and dandy, and I'm not looking to take a loss on it, but nonetheless, it's just not really progressing for the amount of money I am holding. And unfortunately, this is a negative on my books because it's costing me interest every night I hold it. For better or for worse, it is what it is. I'm still going to profit in the end of it because of the way I set up my take profits. But still, it's just annoying that it won't go away. That is, the market won't just drop and let me clean off my books. This market is cyclical. It's just very slow. And as we can see from the actual order book, there's very little traffic in it. Very little volatility, and well, it is what it is. Welcome to the world of trading. But that's a good thing, really. That's what makes this pair so wonderful to learn. So let's get back to the close-up, and we can see the market is slowly starting to come down, but it is very slow. And we can see there's almost no volume up here, and almost all the volume is down below. That's a good sign. That means this market is still well poised for a deeper drop, which means I might be able to actually sell off some of my positions, because other market participants have already demonstrated that at least for to this level, that is, these two positions are considered overvalued. So in terms of the long-term prospects of my trading, I will at least be able to get rid of these two spots. Of course, below that, there isn't much activity either, but that will come in time. For now, I just want to get rid of some more of this and take my risks down even further. Lazy trading is a double-edged sword because of that process. If you're willing to sit and wait, you will eventually get money out of it. Will it be worth the wait? That is always the question, and in this case, no. It's not worth the wait. But it's not worth taking a loss on either. I don't want to lose $24. I would much rather wait it out and simply collect it over time. I could take a loss at $5 or so, and I might do that. I don't know yet. Still time will tell. But I don't want to take a loss at $24. Not when I am nowhere near any kind of critical thinking process with my leverage or market conditions. If my margin was higher, like at 26, 30%, then this would definitely be on the chopping block in terms of my bigger positions that are more valuable. But right now, being at, even when I was at 20, 25%, I had enough leadway that I didn't need to worry about it. And that's really the important part here. Don't let yourself get caught in a box where you don't have options. Always try to keep your options open as much as you can. Because as long as you have options, you don't have to take hard losses in one big bite. And that is absolutely worth gold. More than anything else in trading, keeping your options open, being able to decide when and where you take your losses is critical. How has your trading been over the last week or so? Has it been stable? Has it been good? Have you done well in the market? Let me know. Share your thoughts. Have you done any losses that might have rebounded quickly? It's always a risk, and it's happened to me countless times, or I've gotten close to writing something off, or I did write it off, and the market will turn around on me in my favor. Let me know what you think. Thank you for watching.